we're going to be looking at AI-related themes with this show today. A couple of things that we want to focus on. One is on the overall ASEAN macro theme, particularly looking at how AI spillover from the US is actually impacting the Southeast Asian economy. So we have our economist Erica with that. Then we are going to go to Jarek, who's going to be looking at some AI themes in terms of stocks that are listed on SGX, CSE, AEM, and also we'll touch on Marco Polo Marine after that big contract win that they've had. Then we've got Husseini, who will be joining us to talk to us about one of the biggest winners of AI, which is Singtel, and also touch upon Starhub and its recent results. Plus, also look briefly on ComfortDelGro, who'll be introducing self-driving tech next year. As always, we'll have some fresh ideas from our chart guy as well. But let's start with stocks first, and I'm going to have Jarek on the line here. Jarek, welcome to the show. Let's start with some very high conviction small and mid caps who are potential AI proxies. And I want to start with CSE. Massive news with the deal from Amazon, last week, and they're going to end up owning around 8% of the company. This is a direct play on AI, I would think. What is this about, and how important is this development?
Okay, so basically Amazon has been working with CSE for quite a while, for the last 2 or 3 years. So CSE does their data centers, the power solutions for their data centers. And I think, if you look at the plans Amazon announced recently, they want to build a lot more data centers in the US. We also have a joint partnership with OpenAI to build even more data centers. So I think they need to secure their supply chain, especially for the power distribution for their data centers, the power units. So I think CSE is one of their core suppliers in this space, especially for the hyperscaler AI data centers. So they want to secure the supply. So what happens is that basically for CSE, they also say that, in order for you to secure, for me to put in my capex, I need your orders, right? So it's a chicken and egg thing. So I think they finally come to an agreement whereby Amazon says that, okay, I'll give. So basically the agreement is that, CSE will reward them 8% warrants at that price, upon condition that, Amazon gives them 1.5 billion US orders in 5 years. It could be more, it could be less. I mean, it could be faster, it could be slower, but within that 5 years, if Amazon gives them about 1.5 billion US dollar of orders, then Amazon is entitled to 8% of CSE Global. And that will also give them, I would say, funds for them to expand in a way. Yeah. So I think it's a win-win. And also, if you look at Amazon, this is not the first deal they did. They did, of course, with much larger companies, with Jabil, and also with a Taiwanese company in the last 2 years. Jabil is also one of Amazon's, I would say, one of Amazon's suppliers, but not for data centers, for other segments of Amazon's business. So they took a stake in Jabil, I think, earlier this year. And Amazon will be the first ever SGS company that Amazon take a stake in. Yeah, so it's actually quite critical. I mean, quite important. Yeah.
Yeah, I mean, I was just calculating $1.5 billion of potential orders. That's about 3 times CSE's order book right now, right?
Yes, correct. And also one is all data centers. So, CSE's order book is across 2 or 3 business segments, right, across many customers. But this customer alone is about 1.5 billion over 5 years. You annualize it, it's about 300 million US dollars, per year. So that's actually quite significant.
Got it. Okay, let's move on to, we have another AI name I want to talk about, but before that I want to talk about still more positive news, which is Marco Polo Marine, which also won one of the biggest shipbuilding contracts ever. What does this do to earnings, and how are you thinking about the stock right now?
So I mean, this is a surprising win. I think this is the largest ever shipbuilding order they have won till date. And actually, if you look at, after the oil crisis, the shipbuilding has been actually quite slow, and they're only winning about, some tugs and barges, or I would say small vessels, small size vessels. And this is the largest ever they win till date since listing. And so it's quite, I would say, instrumental to earnings. If you look at the total size, it's about close to about 190 million Sing dollars. The vessel is worth over 4 years. So assuming an 8% net margin, this will add about 4 million of profit per year. That's why we are raising our estimates by about close to 15-16%, for the next one and two financial years. So it's actually quite instrumental in that case. About 15% up in earnings, at least for the next 2 to 3 years. Yeah.
Okay, so very high conviction buy on this stock as well, and you actually increased target price as well. Now, actually, let's move on to another AI name that's actually run well ahead, I think, of valuations, which is AEM. You're still sticking to a sell on this stock. What are you thinking here?
I mean, if you look at earnings and valuations, I still cannot understand. I still cannot really justify the valuations. If you look at earnings wise, their recent numbers, they actually disappointed the whole market again, right? So it's not that they are doing better earnings or better than what market expects. They're actually doing worse, but somehow the market is still able to tolerate that for the basis that future earnings will be better. Right. So as from now, since if you look at, you look at fundamentals, since the start of this year until now, they have consistently disappointed market in terms of their earnings. And fundamentally, in terms of valuations, they are the highest on the street across even UMS and Franken. For me to even upgrade to a whole, I need to be based on I need to put a PE of about 30 times to 35 times, which I don't think that is too rich for my liking. So I think that they also mentioned that the ramp up in earnings will only come towards second half of next year. So first half of next year will still be quite, it will still be quite slow, or rather will not be a big ramp up in earnings. And also they still have the lawsuit overhang from Avantes. The last lawsuit, they spent about $20 to $30 million to settle the case plus legal fees. In this lawsuit, they said the cost will be smaller, but it's still an overhang in terms of profitability. Noting that they just make only about 6 to 7 million this year in profits. Right? So one lawsuit could wipe out all their profits, or rather wipe out all their growth next year. So with all this overhang and all, I think that the stock to me still looks like a sell to me, and I think that it's still early to buy the stock, because the earnings all this will only come in, I would say, second half next year. Yeah, so it's still early for me, and valuations which seems to be too rich for my liking.
Got it. So expensive expensive valuation is not really good visibility on earnings. So sell on AEM. With that, thanks, Jerry. And let's shift gears and go into a much more 30,000 feet view with some macro. With AI, we've had this fear of a bubble now for a long time. Now, I don't know where that's going to go, right? I mean, bubbles can last for much longer than what you fear. I just saw Michael Burry, the guy who called the GFC, actually closed down his fund after being very, very short on AI. So whichever way the bubble goes, one thing is for certain, which is that the spending on AI still continues to grow massively in the US, and that is actually having a big impact on Southeast Asia. And we got macroeconomist Erica today joining us. And Erica, welcome to the show. Hello. Now, when we look across ASEAN, GDP readings have come in actually much stronger than expected across most of the ASEAN markets. Maybe Thailand, probably one of the exceptions. And your team is saying that AI is actually a factor here. Can you explain why this is the case?
Excellent. We got to look at the AI action in the US. So that is helping ASEAN countries, but also there's a lot of AI action happening right in our backyard. So looking at the US, we know that the tech companies have been investing trillions in software as well as IT equipment to ride on this increasing demand in AI. And that is helping electronics exporters in countries such as Singapore, Vietnam, and Malaysia. So you can see that all these three countries have been reporting super strong export growth in the last few months, and we expect that to continue. And then coming nearer to home, the AI action in Southeast Asia, we can see that there's a lot of data centers being built, especially in Johor of Malaysia, and Bangkok in Thailand. So I think the growth of data center activity will be driving Southeast Asian names, not just in data center, but also in construction and in energy, Thilan.
Right. Right. But I'm always a bit worried about, betting on one horse, which is AI. So if you think about the ASEAN economies going into 2026, what are some of the other factors that are going to lead or drive growth for our region?
So if AI, if the party comes to an end, Helen, I think the good news is we still have a couple of things that's doing well for Southeast Asia. So number one, FDI. So we know that Southeast Asian countries have been receiving a lot of foreign investments in manufacturing, partly because of the China Plus One trend, which is MNCs diversifying their capacity into non-China venues amid the geopolitical tensions. So that will go on, especially in countries such as Vietnam, Malaysia, and even Thailand. And then we also foresee a wave of interest rate cuts coming up. So we know that with the US dollar on the weak side, it opens up a lot of rooms for our regional central banks to cut rates without having to worry about currency volatility. So we expect monetary easing to help support growth. And one last thing is tourism. So we think that tourism in Vietnam, Malaysia, and Singapore will get a huge boost from an uptick in Chinese tourists, Dylan.
Got it. And I can't let you go without asking about China. You are our China expert. Very quickly, do you think China's growth engines will finally start to throttle up in 2026?
So I think that China has had a pretty good run so far this year, given that it has been the subject of the U.S. Very, very high U.S. tariffs or trade restrictions. So in the first 3 quarters, you can see that GDP growth really outperformed, but we can see that there are speed bumps in the final quarter of this year, partly because the government has stepped back in providing consumer subsidies. So sales of household appliances and automobiles have slumped because of that. And then at the same time, we see that industrial capex has also been quite weak, partly because factories, some of them have been actually shifting to Southeast Asia. So consumption and investment might come under strain, but we are still looking at quite resilient GDP growth for next year of 4.2% from 4.9% this year.
Got it. So still quite a lot of resilience coming from China as well. So pretty strong ASEAN, strong North Asia as well, particularly China. So a lot to look forward to in 2026. Erika, thanks for joining the show. Now, I've got a very interesting question from Jay, who's asking, we haven't had a meaningful correction since April. Does the team think we are due for a correction in the local names before the year end? Well, Jay, it really depends on what you mean by a meaningful correction. Is it 5%, 10%, 15%? And I think while, the sort of normal market gyrations notwithstanding, we think there are quite a few factors that are supporting the Singapore market, and quite large, quite visibly the construction boom that is ongoing. That is continuing to drive liquidity into Singapore, into the domestic market in Singapore. Plus, overall, I mean, we saw this in the third quarter results season as well. We did see continued flows of safe haven money coming into Singapore as well. And if you look at the overall results season, results actually have been pretty resilient, despite all that is happening globally as well. And plus, we shouldn't forget the fact that the EQDP, the MAS program EQDP money really hasn't started to flow through into the market. And this is institutional money who has to come in and has to kind of take positions in some of the mid cap and the small cap stocks, while most of those stocks have kind of run from more retail. So you still haven't seen the institutional participation really ramping up as well. So Jay, I don't know what a meaningful correction is. I think the reality is we still see quite a bit of support for the Singapore market continuing even at these levels. And also, one thing to remember is that a lot of investors kind of look at current valuations versus the average valuation for the last decade or so. But for me, the last decade has been the lost decade for Singapore, which means that the valuations have artificially been low. So is that the right valuation metric to look at versus current valuations? We remain pretty bullish on the Singapore market. We think that 4,600 plus STI is the direction that the market will head, and we are not really seeing any factors that is changing our view on that. With that, let me bring Hussaini on the line and talk about telcos. Hussaini, Singtel its push into AI has been a pretty powerful move, and I think that's one of the biggest proxies to the AI movement in Southeast Asia. What are you reading after their recent results?
Yeah, thanks, Milan. Thanks for having me. See, the results were quite positive and assuring in the sense that the first half FY26 earnings grew by around 16-17%, and it was mainly led by associates. But even at the core business, which is Singapore and Australia, we saw a fair bit of strength, especially into the Singapore enterprise space. Optus as well posted a positive mobile growth, and on the back of that, a very strong EBIT growth. Within Singapore, the NCS business of Singtel, which is IT services business, also posted a very strong EBIT growth, more than 20% EBIT growth, and also a strong book to bill ratio. So there are multiple engines firing for Singtel. As far as associates are concerned, especially India, Bharti Airtel in India, and AIS in Thailand, they posted a very strong top line growth. And because of the operating leverage and most of their capex is already done with, they posted a very, very strong earnings growth. For AIS, earnings growth was more than 40%, 40, and for Bharti Airtel in India, it was more than 60%. So combined that, it was a very strong result from Singtel. The only area which did well was the mobile business in Singapore, wherein they posted around 10% revenue decline. But if we take that out, and there are some green shoots we see over there, we can discuss that. But if we take that out, otherwise it was a very, very strong growth. Now, as far as the AI business of Singtel is concerned, again, they had taken a fair bit of lead in that space. First is data center, wherein they are going from 62 megawatt to all the way to say 400 megawatt in different markets as well as in Singapore. So that's the right thing in my view they are doing. The second area is GPU as a service or AI as a service, or we call it Neo Cloud, where Singtel is taking a lead, and they have the track record of running data centers as well. One area where we see some development taking place is that there are talks that Singtel and KKR may take over or acquire STT GDC. They already own 18% of it, but there are talks that they can take 100% of it. And that will further reinforce their position into the data center space. And in my view, Singtel has all the financial backing, balance sheet strength to execute those kind of investments or acquisition.
Got it. And very, very quickly, just on Starhub, I think the results weren't particularly strong, but you've got a buy on it. So in maybe 30 seconds, if you can say why you still have a buy on this stock.
So no question, the results were weak, again, mainly because of the mobile side. But again, we see the green shoots in the mobile space. We are seeing consolidation upcoming in Singapore. And even ahead of consolidation, we are seeing that some movements are already started taking place in terms of competitive rationalization. Starhub last week only announced that its challenger brand 8 will no more offer, means they have launched $12 and $15 plan. They used to offer $8 plan. So from 8 they went to 12 and 15. And Singtel as well has rolled out or they disclosed that under their challenger brand called HEAP, they won't take new subscription. So there are some indications, early indications, that the industry is moving towards more competitive rationalization, and that drives our buy on startup as well.
Got it. Thanks, Hussaini. I just want to touch on ComfortDelGro, which not many people think of as an AI stock, but just bear with me. Eric's keeping his buy on this stock with a 6% implied dividend yield. Third quarter earnings were up 22%. Mostly boosted from a depot sale that they did. Public transport margins actually improving. Third quarter EBIT up around 16%. From better UK Metro Line renewals. The Stockholm Rail JV will be fully operational from this month. And they also pre-qualified for the Copenhagen Metro. Taxis, private hire vehicles is competitive. That segment EBIT is down about 11% quarter. But some good news from Singapore. Cancellations there fell 40% after the ZIG cancellation and waiting fees were introduced back in July. Now, very, very positive on autonomous vehicles. This is where the AI angle comes in. They're launching an autonomous shuttle in Punggol in early 2026 with Pony AI, which is one of China's premier AI and mobility companies. And this will actually come up on the ZIG app as ZIG driverless. So I think this is something that can scale up very, very quickly, which will actually enable a significant cost saving and margin improvements going into the medium term. The full consolidation of CityCab plus the 5% public transport fare hike coming up in the 27th of December. So, not much of a Christmas present for the rest of us, will offset some of the company's bus package losses that they had in the 5th of July. So we are maintaining buy on the stock. Has been a bit of a laggard. We think probably quite an interesting point to get in. With this, let me quickly look at what we have from our chart guy. He's got a buy, a technical trading buy on DFI. He thinks that it's on the verge of a potential continuation breakout as the price has repeatedly tested the 351 resistance. And he's got a trading sell on Valuemax. It's entered into a new distribution phase after closing below its descending triangle pattern. A lot more of that in our newsletter. And before I let you go, do remember to sign up for the corporate access exclusive on iRead Global. If you're really looking at REITs, particularly in European retail, industrial, this is a company that you really need to watch out. So do have a look at that. With that, we are out of time. Thank you so much for your support. As always, have a profitable trading week, and we'll see you next week.